Good evening, everyone. A quick sound check. Good evening, everyone. Let's wait for a few more seconds before we start with this session so that everyone can join in. Great. So let's start. Good evening, all, and welcome to the first session of this new financial year 2024-25. And wishing you guys all the very best and a successful financial year ahead with lots of green MTM. So let's make a fresh start, which we have been doing to learn and grow together in this highly competitive field of derivatives markets, because it's too tough to make money here. But in case you have a process and you can find an edge, it will help us to stay ahead and not be a laggard. So that is what our aim is at VTrender, and this is why we are having these sessions at 5 p.m. so that we can spread what we do and what we are to like-minded traders, and they can make use of it. So last week we had a session on how we can use the VPOC on a line chart. So we also saw what line charts were. It was a new addition to the VTrender chart section under the menu, and we can look at line charts of futures as well as options. So we had studied couple of option charts last week, and we had seen how it helped us to identify support and resistance levels. So taking forward the uh, pre- uh, same presentation forward, I would want to take you guys back to the 22,000 call option chart from last week. So this was the 28th of March. We had a session before this, and we had seen how the 22,000 call had stalled right at 300, which was a POC from 18th of March. So because we don't have these charts, this was the last week expiry, last month's expiry. So we don't have them anymore on VTrender charts. So I have taken screenshots of them and I have posted it for us to have a look and study the same. So what I would do is I will run through these examples from last Thursday, and then we would go to what happened today in Nifty futures, as well as take examples of today's charts in options. So on your screen, you have the 22,000 call option, and you can see this is still the 22nd. These are the 6 days from 15th to 22nd March, where we had made a note of these POCs of different days. The highest POC on this chart you can see is at the uh, 300 level, which was on 18th of March. So what happened on 22nd is, in the rise we had, the call options stalled right at the 300 level, which was the previous highest POC of this call option till then, and it came back to close at 200. So that is what we had discussed in our presentation last week. And this was before the 27th and 28th. So what I want to bring now is the charts of 27th and 28th of how this call was in a small range on 26th and 27th, and then on the 28th it gave us a good move above the POC. So if you can see the chart which is on screen right now, you can see the 26th and 27th, both the days the option was mainly below the VWAP and the POC of that particular day. But on 28th, and both the days it saw some writing. POC was around 170, 180 zone on the 26th, and on 27th the POC shifted to 150. So there was a small uh, push for the writers when it shifted lower to 150, and the some laggard writers were forced to exit in that call as the POC shifted higher to 215. So after this, if we look at the 28th March auction, which is there on your screen right now, we have the 3-day auction, but we are focusing on the 28th March auction. So the open type in this was a drive up. We had an open test drive in the futures also. So obviously this option was opening above that 215 reference, the POC, and it remained above this. So for the first time in almost 3 to 4 days, the this option, the call option, was staying above the POC and the VWAP of that particular day. So this is when it was giving us that sign that it is going to go further up. And then it took out that earlier reference of 300, and you can see you have a green bar. So all these line charts, we support them with what we see on the order flow in the futures or even in the options. So if we are getting buy signals there in the order flow, it gives us extra confirmation that this has got more upside to do. So once it crossed that 300, you can see the 300 never was tagged again, and it kept making higher highs all through the day. So it went on to make a high of 516, I think, in the K period on that day, before we saw that long liquidation move into the close. It was a long weekend and it was the expiry. So whatever the reasons, we saw a big liquidation break. But you can see this option came down and took support right at that POC of 300, and it closed around the VWAP of 327. So this is how we use the VPOC on option chart. It gives us probable targets. It also gives us probable support levels and probable resistance levels where we can expect supply to come back or where we can expect demand to come back. So this was about the 22,000 call option. And in the on the same day, I would want to give one more example of the 22,500 put. So what you have on screen right now is the 6J from 19th to 27th of March. You can see the put also as is being written. 22,500 put was written with the POC into the close on 27th being at 300 levels. So that means 22,200 spot was an important support for the monthly expiry. And that is what happened. We could see this POC kept coming lower. From the 19th, it kept coming lower. It was at 300, then it came down to 275, then to 180, then it came down to 140. And on that day, this is the 22,500 put chart for the expiry day. So we can see how after 130 the OI began to rise in a big manner. So when we are watching line charts, this OI rise and the OI spikes become more important on expiry days because they are telling us which of the writers can get stuck or which are the laggards and who are writing for pennies. So when we saw this big OI rise after 2 o'clock, because the Nifty was obviously in a trend day setup, the 22,500, the OI was rising in a big manner, and we can see the POC shifted down to 30 levels. So, but into the close, this was, I think, after 315 or 310, when this move happened, it took all those writers into uh, uh, panic mode, and all of them were forced to exit. So you can see these OI spikes, the green spikes were writing, and once it got back above the VWAP and the POC, it kept going higher and the OI kept dropping. So this is a very good clear sign of the writers being forced to cover. So here our targets when this move happened above VWAP was the POC levels of the day as it was coming down. So this was one level of 60, 58, I think. And then we had one higher level at 140. And then the higher level was at around 170. So that is where I think we settled down. The opening POC was at I think 255 or something. So that level was not tagged in this put option. But if the auction had fallen some more, we could have seen uh, the put tagging these two POCs also. So this is how we look at how to make use of the POCs while trading options, and uh, we'll take them as important cues. So whenever an option is getting above the VWAP and the POC of particular day, we will look at the previous POC levels where it was for at least some time as probable targets. So this was about what I had for the 28th of March. So before we shift on to today's auction in Nifty futures and talk about some probable auction trades of today, if there are any questions, you can please feel free to ask. So if there are any questions, please bring them on, guys, before we can shift to today's auction. Fine, I guess. So let's continue on the line charts topic, and what you have on screen right now is the Nifty futures line chart of today, and you can see this is of from the 28th of March, the closing, and yesterday and today's. So you can see the POC at close on the 28th of March was that 22510, 22511, where my mouse is right now, the cursor is right now. And yesterday we had a very narrow range day, and we had the POC. We did see some selling coming in at 22,600 level where the POC was. So this 22608 was the POC of yesterday, the pink line. And today, when we opened, we first made an attempt to probe lower, but we did not break below. We did not stay below this POC for a long time, and we made this big move up. So you can see this green bar. It's stalled right at previous day's POC. So not just in options, even in futures, you can see what happens when the line charts are showing uh, a move towards any POC. So when it went towards yesterday's POC, we in order flow we got an RS. So we were not getting an IB. And here also we can see we have not been able to get above this POC level. So it was very clear in market profile. We have this very nice setup. When there is a rejection at one POC, the auction moves on to the other end POCs. So which is what it did, and it went on to probe lower and tag this POC from 28th of March. So this is where again it took support. We did not get any IS over here, but we got RBs. So what it was telling us that this POC is being defended by the buyers. So in case we would have gotten IS over here and we had broken below this POC, we would have probed lower for the other lower POCs which were there before this. So for this, if I can just increase this timeline and show you, if we had got an IS at that POC, we would have looked at this 22430 as our lower target. So, but we took support at that POC, and after that we remained in a very narrow range. We have clocked just a 104-point range today, and it is the second day of the series and the second normal day also. So although we did get rejection at two ends today and we have small tails, so we can expect to move away from this 2-day narrow range which was forming in Nifty futures. But this is how we will have to take this forward. So what we have seen is the Nifty futures line chart, and I will show you a couple of examples of how the call as well as the put stalled at that important reference. So we did see here that how on the upside this POC from yesterday stalled the move. So when we traded the 22,600 put today, this is the 22,600 put line chart of the last 3 days from 28th March to today. So you can see this POC here is at 214, and this higher POC from 28th of March is at 241. So today when we had that move lower in the D period, we at 11 o'clock you can see the high this put option made was 239. So it was stalling right at that POC. So even in options, these concepts work very beautifully. And when we see the futures and we see no IS coming at that POC of 28th March, we know that the option is also done its objective, and for more upside, it will need to take this higher POC of 241. So in case we had got an IS and we in the futures and we would have taken out this 241, our next target would have been this higher POC level of 317. So which is still the case going forward for this week's settlement. So this is how we track these VPOCs on option line charts, and we see what is happening in the order flow and accordingly take trades. So what after this move, it just settled down into a narrow range, and later in the day it came below the POC and the VWAP and has closed below. So the put is definitely closed weaker uh, per se uh, compared to the POC and VWAP, but we will have to again look at what happens in the call side. So we have seen the 22,600 put, and I would get to the 22,300 call option now. At the open, you can see this was the open, and you can see this POC from previous day at the close was at 241. It was similar to what POC we had in the put also. This 22,300 call also had that POC at 241. And in this move in the A period, we made a high again of 237. So you can see this is also stalling right at this POC level. So this is what is telling us that the auction is kind of getting resistance at this point. This call is getting stalled at this level. So for us to see more upside in the call, we needed to take this POC out. Once this POC would have gone out, we would have looked at this as our probable target, 255 and this higher POC of 267. So this is how the option charts, the line charts in options help us along with the VPOC and the VWAP. So this is what we do. And here again into the close, you can see the OIA has dropped and we have closed above the POC and VWAP of today. So going forward for tomorrow, this POC of today would be the immediate support. So in case this 170 is holding at open tomorrow, then we can look for a move back to this 241 level. This POC of the A period, which is at 187, is one reference which needs to be taken out. But again, we can look for these higher targets. So as I said, we look for confirmation in the order flow charts when we see this. So that is how we take a trade in live markets. So this is about the two option trades. And let me now go to a uh, line charts of the option which was in focus today because it was the expiry day. We had the fin Nifty expiry today. So you have the market profile chart on the left and the line charts on the right. So before I start on this, in case there are any queries about what I have covered so far about the two option charts we covered of today, you can please shoot them. The 22,300 call and the 22,600 put. Yes, the Friday we would be having a session on the failed auction, which is a very important concept in market profile. So make sure you attend that, and we will do our best to explain every detail about how a failed auction works in market profile and how best we can make use of it. So that would be on Friday, the 5th of April at 5 p.m. So moving ahead with today's session. So this is the, I would just want to put up the 21,150 straddle chart of fin Nifty of today. So how the line charts will help us to identify whether it's a short gamma or a long gamma trade. We have spectrum charts in Nifty which gives us the range, the expected range of the weekly settlement. So the expected range on the lower side was 22,300. So that is the reason we were looking at the 22,300 call. And because we would want to take one out of one deep in the money option strike, we looked at the 22,600 put. So this is an answer to Shiva's question about why 22,300 and 22,600 put and call was chosen. So you can watch the line charts of any option, but we want when it is a Monday and Tuesday, we would want one strike deeper into the money for both Nifty as well as Bank Nifty. So that is why we were looking at the 22,300 call and the 22,600 put. Because in spot we were very close to the 22,500. That was also the gamma zero level. So we were looking at the 22,600 put. So coming back to the straddle chart. So here using these line charts in the POC of any particular day, especially the expiry days, we can identify whether it is a long gamma or a short gamma setup. And also during the day, whenever there is a change of setup from short gamma, things may change and it can turn into a long gamma trade. So when will that happen? How can we identify those in the line charts? So I gave you that example of the 22,500 put of 28th March, where the writers got stuck. So they were blindly writing even at 3 p.m. with the POC shifting to around 30 levels. So that was a hit, and all of them had to run for cover. And from 30, it went on to make a high of, I think, 230 something. So similarly in FinNifty, we can see the open interest of today has been rising right from the open, right from the start. From 9:15 till the close, the OI was only going higher. And you can see the POC, which was at 100 levels at the open. Once it came below the POC in the A period, it never got back above the POC in the VWAP all day. And the POC was making lower step. It is like you go down a staircase, you find steps which are lower, one step lower than the next. So this is what was happening with the POC in this straddle. It was going lower and lower and lower until it went on to make a lowest low of 10. So this is how we can identify that this particular straddle was having huge open interest, and the open interest which was just 45,000 yesterday at close, and in the open it was around 1 lakh 89,000. It rose up to 11 lakhs 79,000. So it was telling us that big money was coming into this. There was big hands who were playing this auction, and it never gave a chance to get into a long gamma mode. So this is how we can track expiry days, taking the gamma zero level. For example, tomorrow we have the Bank Nifty weekly settlement. So we can see from the spectrum chart where the gamma zero is and accordingly track the straddle of that gamma zero and look for probable long gamma setups. So that is how we look for uh, trades on the expiry day, which will help. The line charts go in a big way to help us how we can take specific trades. So this OI was rising all the time. If I look at specific line and the line chart of the call and the put, here again you will see there was in the call chart there was one move which went above the POC, but that was immediately reversed. So in case we want to have a Dukan trade, what we call as the Dukan trades, what we see into the close, especially from the K period onwards, is we see one big green candle scaling above the VWAP and the POC, and then we see the OI start to fall, whether it is a put or a call. So that is how we look at probable Dukan trades, and they are very low risk setups where we are looking at some blind option writers who are laggards who get stuck and run for cover when the auction moves against them. So these line charts are very useful instruments to track those Dukan trades. And because we have lot of information on this line charts, we have the POC, we have the VWAP, we have the open interest, and we have these spikes, OI spikes. So if we would have had a Dukan trade in this 21,150 call option in today, the option would have got about this POC of 40, and we would have seen OI red spikes here, and the OI would have started dropping. So when that happens, we can to get into this option for a Dukan trade, either the 21,150 call or a 50-point lower call, which is 21,100 call, to for the probable squeeze higher into the close. So here you can see even this OI kept moving up, and the POC and VWAP were always above the price of the option. And in the end, these OI spikes are only profit booking. So even if I have a look at the put chart, it gives us the same story. At the open, the POC was at 57 and it never came back to that 57 level. So slowly it did give a spike here to that VWAP. Again, late in the day, it gave a spike in the K period to the VWAP. So you can see it just tagged VWAP and from there it reversed. So it was not able to get above VWAP. So once it is able to get above the POC and the VWAP of that particular day, then you can see REITs OI spikes and the OI beginning to fall. So this in conjunction with the order flow, which will show us IB in that put order flow chart, helps us to identify these trades and take them. So this is how we use the line charts, and this is how we can make most use of them on expiry days. And it also helps us to identify which of the expiry days can be long gamma trades and which of them are short gamma trades. So if you're a option seller, you can look at these charts and remain straddle a short or a strangle short on expiry days and milk that premium as long as the option remains below the POC and VWAP of the particular straddle or a strangle. We can also chart these line charts for straddle. We can also look at the market profile chart and take references of them. So any queries on what we have covered today, guys? I can quickly answer them. So we have a query from RM asking if you need some training to use Premium Plus and how much time. The activation is immediate, and uh, you have lot of tutorials on the VTrender chart section. You have lot of orientation videos which helps you to grasp all these concepts. Plus we have done lot of sessions. All those videos have been uploaded in the YouTube channel, so you can go through them and you'll have a fair bit of idea. In all cases, in case you still have any queries, you can feel free to write to charts@vtrender.com, and we will definitely help you out with whatever your query is. Yes, we don't follow the max pain strike, but yes, it is similar to max pain. Gamma zero is where the uh, option writers are more focusing on with their inventory. So any queries anyone has, you can please write to us at support@vtender.com. My Twitter ID is open. My Twitter ID is at Uttam Goel. You can DM me on Twitter. We would be happy to take questions from you, answer any queries you would have. So any more queries, guys? So as I was telling, we can use these line charts on expiry days in much better manner, because that will help us to see whether you have a long gamma setup. So tomorrow we have the bank nifty. We use them extensively on expiry days. So Wednesday we keep them reserved for bank nifties, and Thursdays we keep them reserved for nifty expiry. So today Fin Nifty does not have much of volume, and what you saw in the 21,150 straddle was more of big money which had come in, because they know that liquidity is less and they were able to squeeze milk all the premium. If you see the market profile chart, you can see it's a very nice easy trend day down in that 21,150 straddle chart. So this is how we work, and this is what we look for. We combine market profile and order flow, and we have these wonderful tools at VTrender which we make use of, because option trading is a highly competitive market and we need to be one step ahead to be able to make money in this. So we need to see how we can get that edge, how we can remain forward and make use of the information at the earliest. So any more queries, guys? So for So we'll have a quick look at the Bank Nifty futures line charts and see what it tells us and what we can make sense of for tomorrow's expiry. I'm not looking at the market profile chart, but I'm only looking at the line charts because today's topic is to see the POCs and how to trade the VPOCs, how to make use of the VPOCs on the line chart. So as we can see, the 28th March VPOC, it started at 47337. So this is a HVN on the market profile chart. This is where the buyers entered on at open on 28th. So this is one important reference going forward. And here we can see this 2-day POC is almost overlapping. Into the close, the POC seems to have shifted at 47,970, which would be the reference for tomorrow's open in Bank Nifty futures. So 47,970 is the immediate reference, and the first support is at 47,838. Break of this 47,838 tomorrow can bring a test of this lower POC of 47,337. So we are looking for a move because we have had two narrow range days. We had 300 point range days in Bank Nifty today and yesterday. So there is a very good chance of a small range expansion happening tomorrow. So if we are breaking below this POC, we are looking for a almost 500 point drop to this 47,337. So on the upside, we have to get above this POC and see what the order flow is showing us tomorrow and how the POC is placed tomorrow for us to be bullish. So unless we stay above this, we are not bullish for Bank Nifty. This will be the support and this will be the lower support. And as in Nifty, we had already discussed 22,510 was the POC from 28th, which was tested today, and we have left a small responsive buying tail. So that will be our lower support for tomorrow and day after the expiry. Whereas on the upside, the 22,608 yesterday's POC has shown us RS, and we have left a small selling tail there. So that will be our reference on the upside. So we will need to get some initiative activity either at 22,608 or at 22,510 for a move away from this balance which has been forming in Nifty futures. Okay. The question is about e-course. The e-course is for beginners uh, who are new to market profile and order flow, and it has 12 videos which will make you prepared for what market profile and order flow concepts as well as the setups are. So any more questions, guys? So we intend to keep coming with such sessions, and every session we want to cover topics which we use in our trades in the VMR, the VTrender mentoring room. So in case you want to have any specific topic covered, you do write to us and tell us about the same, and we will try to cover them in one of our sessions. That is the entire objective. We are using these tools to be profitable in intraday trading, because intraday trading is highly competitive and we need to have the scales tilted in our favor. So our aim is to get 80% of our trades right, and that is why we are following this process which we have. And we don't do any random trades. We have a process, we have a setup, and we strictly go by that process, and we take trades only based on that. Along with that, we also have a risk management plan in place. So we are very specific about what the risk per trade would be, and we accordingly take action whenever a trade opportunity arises. So our next topic is a very commonly asked for, and it has been highly in demand. We have lot of queries asking for a failed auction session, and which is why we are having that on Friday at 5 p.m. So make sure you attend that. And because failed auction, as I mentioned, is a very important concept in market profile, and it helps us to identify swing references. It also gives us important reversal points and tells us that the auction is making a reversal from one zone. Okay, the next question is from Nagraj asking if any new futures are in the pipeline. At VTrender, we are always evolving. We are always getting new features added. In fact, almost every week we are getting a new version of the VTrender charts where there is something new which is being added, and that work is already happening in the background. There are a lot of plans, and they will, as and when the testing is done and they come out, we'll definitely announce them on Twitter in these sessions, and Shai will make them public before he tests them well thoroughly, and then you can make use of it. But yes, there are big developments happening. As and when they come out, we keep coming out, because addition of KRL, the key reference levels, was one such addition. Line charts is one big addition. We have the option suite which was developed in house. The spectrum is something which is we can claim that it is our proprietary tool at VTrender charts. So we keep on evolving, we keep on developing. Even the order flow charts, there've been a lot of features which are being added. So ultimately, we need to make use of these features or whatever we see on the charts to make money. So that is what the aim is. So we need to make sure that we are following a process. We can only speak about our platform, what we have. I have not seen any other platform other than VTrender charts, so I'll not be able to comment on other platforms. Pranav, because we know what our charts are showing and we can only speak for our data, and this is the data which we also take trades of. Any more query, guys? So I think that's it for today. It was great having all of you guys for this session, and we look forward to having you back at Friday at 5 p.m. for the failed auction session. And do write to us in case you have any queries. We have given our email. You have my Twitter ID. So, and in case you want us to cover any specific topic of what VTender works on, do feel free to write, and we will be happy to cover them in our upcoming sessions. These are all real-time charts. All of these are real-time charts. The open interest comes every 3 minutes from the exchange. So open interest is updated every 3 minutes, but the other order flow and the price charts are live. Yes, this forum is for the active traders who are totally into the intraday scheme of things. So thank you guys. Thank you for joining us. I would be signing off for now and looking forward to meet all of you again on Friday at 5 p.m. Thank you for joining in, guys. Have a nice evening.